Good morning. It's Chris Matuszewski with the Built in Calgary team and Royal LePage mission here. I've got Joe Jacobs with Mortgage Connection going to answer a couple quick Q&As for us on new to Canada immigrants and what is the options available to obtaining a mortgage. So welcome, Joe. Good to have you on board here again.
Thanks, Chris. Thanks for having me.
Yeah. We enjoy your knowledge and value that you add to our clients here, that whether it be first-time buyer or looking to do equity takeouts. So over the last couple of weeks, we've had some people filter through our websites here, which is kind of interesting for Calgary, that are not only new to the province or potentially be moving to the province, but we also have new to Canada that have been here anywhere from 6 months to couple of years now, and we just had a situation where we had medical professionals that are working at the hospital here in Calgary. That one was from South America, and then another being from the UK. And due to COVID, they're kind of, I guess, in limbo and sort of waiting for options that are available to them to get their landed immigrancy. But you think that you may have some options for people that may not be aware of. And I guess that's why I wanted to have a quick chat with you. So talk to me a little bit about, people that are new to Canada. Typically, what is the wait time for people looking to obtain a mortgage?
Sure. So, I think there's kind of two categories you can talk on if you're new to Canada. So if you're coming as, a permanent resident, you have your permanent residency card, that's one type. The other type is you're here on a work permit, maybe looking to become a permanent resident, but you don't have it yet. The good news is there's programs for both of those scenarios, with as little as 5% down for both of those scenarios. Mm-hmm. So all three insurers have new to Canada programs. Really kind of the timeline on it is not much as long as you're coming with employment. So if you're employed here, you probably have an established Canadian credit, and that's okay, because they will look at alternative credit. So I say for most people, you probably have to be about 6 months to a year being here ideally, because they want to see alternative credit. So that may be normally they want to see like proof of rent, landlord reference letter, utility bills, but they will also look at foreign bank information and reference letters. Mm-hmm. So, someone coming from the UK where their banking system is very similar to ours, it's not going to be a challenge for them to show a history of creditworthiness, or even for us to pull an international credit bureau on them. And the lenders will look at that similar to Canadian credit. So there are options fairly quickly for someone that's new to Canada that hasn't established credit to be able to get a regular mortgage just like they were Canadian.
So where would the opportunities lie for somebody that only needs 5 or 10% down versus somebody requiring 25 or 30% down? What would be the two differences in those scenarios there?
So like there's certainly really good options for minimum down, 5 to 10. Where there's a bit of a gap is someone says I have 20% down. A lot of lenders don't have a great program for that. They have really good programs on the lesser down, or if you have like 35% down. There's a lot of programs that if you have 35% down, you're new to Canada, even if you don't have full employment, they'll still do it as long as you can show that you have enough savings to cover a year of additional mortgage payments plus your down payment. So for someone that's coming with a really good cash position, even if they haven't come with employment here, they can do something. So there's an opportunity there if you're coming with, say 35% in additional savings. And there's really good opportunity if you're coming here with work and you've got that 5 to 10% option. Where we see a gap is someone coming with, say, 20%. There's not nearly as many programs for that scenario.
Would there be a difference for somebody that would be able to obtain a mortgage with, say, 5 or 10% down versus somebody putting 35% down in terms of, the rate that they may be able to get, or I guess, different options that come with a mortgage?
The rate pricing can be fairly similar in those two brackets.
Mhm.
Obviously, the biggest difference is when you're going with the 5 or 10% down, you're paying the default insurance for the insurers. So you have that additional cost on your borrowing, but the rates are going to be fairly similar on either of them. So these programs are designed to help new Canadians get into homes. They're priced the same way as if you were born in Canada or you've been here your whole life. So they're not paying a premium in interest rates for any of them. There's just a little more paperwork for the client because they're going to have to show a lot more history just because they don't have an established Canadian credit. So you're going to they're going to show a lot more bank statements and proof of credit worthiness because they don't have the data collected here in Canada. I guess the only other thing I would touch on that we see a lot is just down payment and where's that coming from.
Mm-hmm.
So often someone will be moving to Canada, but they may still have money overseas where they're coming from. And that can be a challenge because they need to have that money here. Most lenders want to see it here for at least 30 days. And ideally, you have it here for 90 days. So that's something that we're always coaching people on. Often we'll see someone say, yeah, I bought a house. And if you don't ask that question, they're looking at moving their down payment 2 weeks from now from overseas, and that can cause a problem. And we've seen sometimes where it just doesn't come in time. So it's a big thing to prepare that make sure that that's one of the first questions we're always asking if someone's out looking at a home. Where's your down payment coming from, and is it in Canada, and how long has it been in Canada? Because we never want to be dealing with a situation where someone's written an offer, waive conditions, and then realize the bank or lender's going to have an issue with where they're sourcing their down payment from.
Yeah, no, that's a really good point. You sort of touched on something that I sometimes get confused about, so I just kind of want to go back to that. What is the difference between landed immigrant and permanent residency? I feel like sometimes those two terms get used.
Sure. So we normally see kind of two different scenarios on how someone's come to Canada. They're either here on a work permit, so they have the ability to work here, but they don't have status to stay here once that permit expires. So if that permit is not renewed, then they would have to leave Canada because they're not able to work here on it. When they come with permanent residence, and we see permanent residents quite often, like once they're coming here, they're coming with permanent resident status. Basically, they're not on any kind of timeline. They're viewed very similar to a Canadian citizen. From a banking standpoint, they're viewed exactly the same. And so there's no requirement to show that they have a timeline in which they can work because they've already received that they're here for as long as they want to be here. They're viewed very similar to a citizen. They just don't have citizenship yet. Quite often we'll see people that come with a permanent resident within a timeline to become Canadian citizens as well, but that doesn't change anything from their mortgage financing. They're getting the exact same benefits as if they were a Canadian citizen at the time.
And do you feel like there's a little bit more groundwork that needs to be done with somebody that's on a work permit just because they're renewing their terms?
Yeah, so that's a really good question, Chris. There can be issues on that where lenders and banks want to make sure that they're, in general, they don't have a work permit that's expiring in a month and they're trying to buy a house. They want to see normally that the permit's still valid for at least a year if they're going to extend credit. There's definitely situations where someone buys a house in Canada, they're here on a work permit, they don't end up becoming a permanent resident, and then they just own the property in Canada. And there's no issue if that happens, but in general, lenders don't want to be extending a mortgage to someone if they think they might be not here in 6 months.
Mm-hmm. Okay. So you talked about people basically having a 1 year work permit or permanent residency. What is defined by work requirements? Like what does the bank look at in terms of the requirements? Is that being gainfully employed by a corporation? Can somebody be self-employed? Is that possible to have a work permit and be self-employed, or are you typically needing to be gainfully employed by a corporation?
Yeah, normally from a work, we will have the again, I'll just talk on the two different types. If someone's got permanent residency and they're self-employed, that's totally
Yeah.
doable and fine, no issue. In general, work permits are provided to individuals that are employed. That being said, I have seen situations where someone is on a work permit and basically self-employed, which it was shocking to me because I didn't think that was really a thing, but I have seen it. It's normally what we're looking at in a work permit situation, though, is someone is here, they're employed somewhere. It's either kind of a term contract, or quite often they're on a work permit and working towards permanent residency.
Mm-hmm.
And that's kind of in general what we're seeing, and what lenders and programs are built around is someone that's gainfully employed with the work permit.
Okay. No, that's good stuff. So, and then just to recap, again, there, typically, how long is somebody needing to wait before they would, obviously if they're permanent residency, they're good to go. But, other options, if they haven't yet received their permanent residency, how long is somebody needing to wait typically before they can apply for the mortgage?
It can be fairly immediate, as long as they can provide alternative credit. So if the simplest is if they're here, for 6 months or a year, there's going to be some established Canadian credit, which really helps. Mm-hmm. If not, then unfortunately it does come down a little bit to the country they're coming from and how easily we can get alternative credit from that country. So there's just certain countries and banking systems that work easier for the Canadian lenders to look at. But we can certainly look at that too. So we've had situations where someone's been here for 3 months and they're on a work permit and they have very little established Canadian credit, but we're able to show a history either through international credit bureaus or through everyone pretty much has fairly good online banking systems no matter what the country is, so we can show that. There can also be language issues though. So if they're coming from a country where everything's in a language that that a lender doesn't understand, we've had to do situations where we actually have translators that someone will pay to have properly documented and notarized translations of documents. So there's always solutions for people. Mm-hmm. Sometimes it's just some extra legwork to get it across the line, but it's not like they have to be here for 2 years, establish some sort of Canadian credit before they can consider being.
Yeah. No, I think a translator is money well spent. Like we sort of started softly doing Spanish, just learning. I think learning a second language for anybody right now is almost an advantage. Where we used to be a pretty homogenous city, and now we're definitely seeing it becoming a bit of a melting pot. Not to the extent of your Torontos or Vancouvers, but it's kind of surprising. I mean, like I said, I'm sure you're getting inquiries from foreign residents. We're seeing it more this year than we have actually in the last 5 years. So I think it's a gaining trend right now.
Yeah, I mean, we deal with new to Canada buyers on a weekly basis. It's probably a pretty significant part of our our business. They're coming to Canada normally for some economic opportunities in many cases. So, and one of those opportunities is home ownership for sure. So it's a pretty big part of the business that we see, and it has been for quite a while. But it's interesting that you're saying that you're seeing more of it now. There's all the bad news that no one's moving to Alberta, and clearly that's not the case.
Yeah, right. Yeah, so I think there's I think there's some bright lights and blue skies on the horizon. I don't know when we're going to break through on that in Calgary, but I think there's definitely some opportunity, and so I appreciate you taking a couple minutes out of your day here and sharing that. If people got more questions, how do they get a hold of you?
They can either email me or call me. Email is just joe@mortgageconnection.ca, or they can give me a shout at 403-617-9123.
Awesome. Thanks for the information, and enjoy the rest of the day.
You too. Thanks, Chris.
Cheers.